It's Monday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Mike Baudendistel is going to give us a Rail Intermodal update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Welcome to your Monday Carrier Update presented by PowerFleet. I'm Zach Strickland, and hopefully everybody has had a great 4th of July holiday, and we're now ready to dive right back into those freight markets to see what's going on. So, starting off things with our volumes, just to see what the holiday did. If everybody recalls, we've got our outbound tender volume index, a 7-day moving average. That means that we have a single-day drop in volumes where people take days off work, not shipping as much. We see these troughs right here, and they last for about 7 days. But due to the impact of the average. But you can see inside of these little troughs, you have movements, intermediate movements in between them. So you can tell generally what the direction is of the freight volumes that are occurring throughout that week regardless. We just started ours. We just had a weekend, so we just started ours. But if you notice, the trough of this particular one is not as deep or as certainly not as strong as some of the ones in the past. You go all the way back here to Memorial Day. We were sitting right under 9,000 on the outbound tender volume index. Right now we are at 11,000 on the outbound tender volume index, which is actually significantly higher than a normal freight period of time. You go back to the pre-Rona days. We had our outbound tender volume index hovering right just under 10,000. We're way above that right now. It did not drop off as significantly as we would have anticipated. Now, underneath that, I have our outbound tender lead time index, which again is a measure of days between requested pickup and tender date. Those did surge finally as we hit the 4th of July holiday, and now we're up close to 3-day lead times, indicating that we are going to see a lot of that freight continue to show up this week and into next week. So shippers are still pushing their freight out ahead of the curve to see what happens there. So that's going to have kind of this compounding effect on reducing capacity over this week. So tender volumes still extremely high for this time of year, for seeing that type of trough. I can't emphasize that one enough, just because most of these troughs see significant 7-10% decreases, and they all drop below 10,000. So staying above 10,000 for a holiday period is a very significant development. Looking at where regionally some of these volumes have continued to drive a lot of this volume, we're looking at the West Coast still having the most significant growth since the early part of May here. We were up about 34% since May 1st out of the West Coast. The West Coast continues to drive a lot of the freight volumes right now. We've got also the Southwest continuing to be one of the stronger markets, with the Northwest kind of lagging there, and the softer part of the country up there in the Northwest. Not a lot of volume moving this time of year. Normally that happens for the late fall, early winter is when the Northwest really picks up anyway. But again, one of the smaller regions of the country in terms of freight volume movement in general. The rest of the country hovering right around 20% right now. Southeast, Midwest. Still in recovery mode, still seeing a good bit of growth, but the West Coast continues to drive a lot of that volume along with the Southwest. Now, what is this doing for our capacity? Where are some of the markets that we're seeing any changes in capacity? So I've got our weighted rejection index, which is a combination of tender market share and tender rejection weekly change. We are still seeing tender rejection rates increase in certain areas. Normally we see after we pass through a holiday, rejection rates start to come down a little bit, soften a little bit. The outbound tender rejection index did come down slightly here over the last few days through the weekend, as we start to see people decide to come back online. Supply is definitely coming back a little bit more, after the holiday, whereas we were seeing a lot of those carriers they're not trying to get in front of things too much. They don't want to overcommit, so they reject some of that freight. Right now we're seeing weighted rejection index values coming down pretty significantly. The Atlanta market, which was up over 30 this time last week, now down to around 14.5. So that's an indication that tender rejection rates are increasing, but at a much slower rate than they were this time last week. In the Atlanta market, Ontario, California, Harrisburg, Pennsylvania, all the largest markets in the country, seeing still a slight increase in tender rejection rate. So there's still markets to watch in terms of increased spot market activity, etc. So anybody out there looking for the spot freight, go to the blue markets on the map today. Down there in the red is Houston dropping off as well. So everybody pay attention to what's going on with capacity right now, and we may start to see things start to cool off just a little bit in terms of capacity as we enter the second half of the year. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your Rail Intermodal Update. I'm here with Mike Baudendistel. Mike, what's the latest?
So I have a number of the largest intermodal lanes here on the board, and we've talked about intermodal in the past as being down about 5% in the latest weeks, on top of being down about 5% last year. But on the board, you see some interesting patterns emerge. So what's in green is LA to Chicago, LA to Dallas, LA to Atlanta, and Atlanta to Dallas. So really, of the large lanes, it's outbound from Atlanta showing volumes, both inclusive of international and domestic intermodal, up year over year. So sort of bucking that trend, down from most other of the larger lanes across the country. And so my explanation for this is really that's the fast way to get goods to those eastern and midwestern consumption centers. It's much faster than taking the slow route through the Panama Canal around to the East Coast. So this is the sort of the pattern we're seeing on freight flows, and we're seeing this translate into intermodal rates. You see that this was a kind of a boring data series up until recently, which is sort of going flat. These are domestic intermodal spot rates, and you've seen both LA to Chicago and LA to Dallas sort of spike in recent weeks, go from about $1.25, $1.50 to about $2 to $2.25 on the eastbound routes. Going back westbound, lots of excess capacity there, sort of 82 to 89 cents. So if you're a shipper and you need to move something westbound, still not in any trouble there. But really just sort of coming back east, you've seen a big increase in rates, and this is really sort of the reason why. This is some of the trucking markets outbound from LA, and you've seen in blue is the long haul outbound tender rejection index from LA, so that we define that as being greater than 800 miles. And so in those hauls greater than 800 miles out of LA, about a 25% tender rejection rate. So that's greater than the national average, which is about 19%. So those long haul tender rejection rates, they do tend to be higher than the overall tender rejection rates, but it's been more true lately, and we're seeing a big discrepancy there in LA versus the shorter haul ones. We have the city COTRI LAX 9, but that just increased from about 4 to 5 recently. So those carriers in LA are preferring to stay local in that hot market. And if you're a shipper and you need something quickly to get out of there, they're looking at intermodal as well as truck. Of course, truck is going to be faster, but I think they're having a harder time finding capacity there. Some shippers are looking to the spot market in order to get that freight quickly to the consumption centers in the eastern and midwestern states.
And with these increasing intermodal volumes, any idea of what type of commodities are moving at these high rates?
I think it's a wide range of things. I think it's a lot of just sort of general merchandise. I mean, if you look at just what usually comes in those West Coast ports, it's a lot of what's manufactured in China. If that's the one sort of theme, is that big lane is Shanghai to LA. So it could be sort of cheap furniture, clothing. But it could be pretty much anything. There's even some auto parts in there, but it's really a wide range of things.
Gotcha. Mike, thank you so much for that update. We appreciate it. And where can we find a little bit more? Are you putting out any reports or white papers anytime soon? Yeah,
working on some white papers on intermodal, so look for those shortly.
Excellent. Thanks so much, Mike. And thank you so much for tuning in. That's going to do it for this Monday edition of FreightWaves Now. The content doesn't stop here. We're always streaming and posting around the clock, so check out our FreightWaves TV app on all your favorite platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.